speaking of kitchen table issues, the Federal Reserve yesterday hiked interest rates again by 3/4 of a point, which, and we can put up tear sheet A1 here, which brings rates to their highest level since 2008. This is going to push mortgage rates even higher. They had climbed over 7% recently. You're going to see this bump them up again. You saw kind of a little run in the stock market get blunted over the last couple of days by this, and
took a hit Thursday.
Yes, and it's another instance of the Federal Reserve, I guess, hoping that that their use of monetary policy is going to be able to affect things that I think it just can't. It can't make it rain in areas that are suffering from droughts. It can't end the war between Ukraine and Russia.
Can't undo spending that's already happened.
Well, I mean, it couldn't exactly do that, but it could pull some money out of the economy. So sort of, in a way, it kind of could, but
I meant like legislative. Yeah. It couldn't undo.
Right, it's not fiscal policy.
Right.
It's not. You'd have to tax that back out, which is the flip side of modern monetary theory, which says you can spend, your only limitation is inflation, and once you hit inflation, then you have to tax it back out. But if you don't have majorities that are able to pass tax increases, then you can't. Then you can't do that.
Jerome Powell, not into MMT.
Well, he seemed to be into MMT.
He was flirting with it
for a pretty long time. I mean, he probably is.
It's
just a description of kind of how the economy does work rather than prescriptive.
I guess that kind of depends on the context. So with Jerome Powell, an interesting mix that I think reflects what we're seeing in the media from Jerome Powell, and I wanted to ask you about that actually, because it's sort of mixed signals, right? Like the soft landing versus what he's going to do with, people were expecting changes here, but the signal seemed to be in one direction, and then it seemed to be walked back this week about where rates are going to go. What do you think that reflects about what's happening inside the Fed?
I think they don't know exactly how to do this, and I think that they're trying to unwind an extraordinarily difficult situation, because they did, with quantitative easing over a period of 10 years, they added trillions to their balance sheet in a way that is unprecedented in world history, and drove up asset prices for years. And so, how to handle that without laying waste to people's paychecks,
right?
Is a key issue. But at the same time, they're operating within a political context that can't get anything done, that can't build more housing when we have a housing shortage, that can't fix supply chains, that can't break up monopolies so that you don't have people price gouging. Because the amount of inflation that is, and maybe we'll get studies about this 10 years from now, that is directly related to companies saying, we now have an excuse to raise prices and we have market power, so we can do it. And so we're going to do it. Might be as much as 50%, according to a decent number of economists. You're seeing, I think it was paint prices, wholesale paint prices started coming down. And on an earnings call, the paint CEO was like, our prices are sticky. And by sticky, they mean they're staying up there. And then he used another term. It's like the gap, the growing gap is just going to go to our bottom line. It's just profits. So wholesale prices are coming down, economy's getting fixed in that sense. But these companies have so much concentrated power that they're like, actually, we like charging more for our product. And if you don't like it, we're the only paint company. Or I don't remember if it was a paint company, but it was, and there's so many examples of companies saying this in earnings calls. Yeah, wholesale prices are down, but we're leaving prices where they are because we can. In a free market, that's not how it works. Somebody else comes in and says, wholesale prices are down. You want $10 for this paint?
Yep.
Here, sell it to you for $9.
And the consumer says, hey, that CEO is a piece of garbage. I'm taking my business elsewhere. But when you don't have the choice to go elsewhere,
exactly,
you're totally stuck. And there are examples of that from earnings calls going back months and months and months, and more specifically even about how they're just plainly not even passing it down to workers. Right.
Right.
I mean, it gets so much worse than just, hey, the profits, because profits can be good for workers if they're passed down to workers.
Right.
But we have specific examples of CEOs, and this is not every CEO. And I'm not saying this economy has across the board been bad for workers, because I don't think that's the case, or a net negative for workers, because I don't think that's the case. I think it's been grossly unfair, especially in cases like that, where you see them specifically saying, we're doing buybacks.
Yeah, yeah, exactly. Yeah, which is just just setting money on fire. So if we could put up B2, because this is the other interesting development on Jay Powell this week. So it's publicly known that his favorite thing to look at is what's called the inverted yield curve, and so it's starting.
Also your band name in the name.
Yeah, that's right, my band name. So it's starting to look inverted, and what that means is that it's a sign of a potential recession ahead. Basically, what it means is that, so if you lend somebody money for 10 years, you are going to demand a higher interest rate because they're keeping, it's 10 years, than if you're just lending it for a short term, much lower interest rate. That's how it normally ought to be. When the curve on the yields there gets inverted, what it means is that you're nervous about that 10-year investment because you think there's a recession coming. So all of a sudden you want you're getting a lower interest. It flips around.
Yep.
It gets inverted because you're expecting that bond prices are going to crash, which bond prices go down, yield curves go up, and so you're starting to see that now. And so what Wall Street is starting to think, okay, well, Jay Powell thinks that this is a sign that a recession is coming. Maybe that means eventually he's going to stop tightening. But we don't know when. But the more blaring red this sign gets, then the more likely you are to see him say, okay, we've done what we can.
Yeah, the CNBC article said that we showed on the screen said the Dow Jones Industrial Average has gained more than 13% over the past month, in part because of an earnings season that wasn't as bad as feared, but also due to growing hopes for a recalibration of Fed policy. Treasury yields also have come off their highest levels since the early days of the financial crisis, though they remain elevated. The benchmark 10-year note most recently was around 4.09%.
Also, I flipped it. You want less for longer rates.
So CNBC.
I used to work on Wall Street, and I still but I was also dyslexic, so
it's my favorite.
Constantly.
My favorite chapter in the storybook that is Ryan Grimm's career is the Wall Street chapter.
Yeah, if you want to, my Series 7 license is probably still being used by some corrupt stock.
All that is to say, CNBC added, there's little, if any, expectation that rate hikes will halt soon, so the anticipation is just for a slower price, a slower pace.
Yeah.
No.
Right. So, and as you watch that, the more it blares, then it might slow down even further.
Right.
Cable news is ripping us apart, dividing the country, making it impossible to function as a society, and making it impossible to know just what is true and what is false. But the good news is they are failing and they know it.
That is why we're building something new, a new mainstream, a healthier one, something more trustworthy, something that we are going to need in one of the most pivotal times in American history. We are building up here for the midterms, for the upcoming presidential election, but we need your help. So if you can help us out by becoming a premium member today at breakingpoints.com, we're trying to change America for the better and the entire world.
So what are you waiting for, guys? Go to breakingpoints.com and sign up and help us build a new mainstream.